CYMAT Technologies Investor Update Call. Before we begin, I'm going to put up a forward-looking statement and give everyone a moment to review it. Perfect. Thank you all for joining the call. This call is being recorded, and if you have any questions to ask Michael Leake during the call, please email it to info@investor3.ca. That's info@investor3.ca. Without further ado, I'd like to pass the phone to Neil Simon, CEO of Investor Cubed.
Great. Thank you very much, Shan, and good morning. I guess good afternoon, good evening, depending on where you are, to everybody on the call today. And thank you very much for taking the time to join the call and hear from founder, CEO, and chairman, Mr. Michael Leake. As most of you know, I'm sure on this call, I've been involved for a long, long time with CYMAT. And I must say, it's probably the happiest, I guess, I've been, and I bet Michael as well, in a long time. So we know it's been a very, very difficult 2 years for CYMAT. Sometimes, all the pistons are not firing, and the company's gone through a very, very trying, difficult 2 years, but they maintained a strong work ethic, motivation. It's a great product. And I am proud to say, and I do want to congratulate Michael, because this quarter was a record quarter. Company did about $2 million. This year looks like it's going to be a fabulous year for the company. Core business illusions back on track. There's other initiatives, as you know, and we all know about a lot of those other initiatives are all kind of continuing to move forward. So there's been a lot of positive developments, but the bottom line of mine is we saw a solid quarter. We saw a record Q1, which is fantastic. Michael will update everybody on that business, what Q2 looks like, and of course can't provide guidance, but that the year does look like it's going to be a much better year on this company's path to profitability and hopefully significant and sustainable growth over the next 1, 2, 3 years, etc. On that note, again, Michael, congratulations on the quarter. I think it was great to see such a strong quarter, and I know you're very excited about the year. And on that note, I'm going to hand it over to Mr. Leake, who again will update everybody. And as Jan mentioned, please email us your questions. If we, for some reason, because we do try to keep the calls within a reasonable time frame, if we can't get to all the questions, do be assured that we will have Mr. Leake answer all the questions. We will certainly make sure we email them to you. And on that note, again, Michael, thank you for your time today to speak to all of us, and I'll hand it over to you to update everybody on what's happening.
Thank you, Neil, and thank you to everybody who's joined for the call. Yes, as Neil said, we are very pleased with the turnaround in operations. Revenue, as Neil said, record of just under $2 million, which is a significant improvement from full year results last year. The complexion of that revenue was largely illusion. We shipped the first of our NEOM orders, a major order to the largest construction project in the world currently. We are spec'd into a number of other projects there, and are hoping to see some of those land this fiscal year as well. We also shipped a major Italian energy company cladding project for their head office. And interestingly, after a period of quietness from our Chinese distributor, we got our first restocking order in the quarter as well. Hopefully that bodes for things turning around in China. Most importantly, we generated free cash flow from operations for the quarter, just under $300,000. And that comes from a combination of just good margin business. Most of our illusion business, as you've been following the company, is good margin business, and a focus on cost cutting over 2024. So we've reduced costs about 15%, and that's come largely from sort of overheads related to salaries, people, a lot of reductions in consultants. We're continuing to look at areas where we can trim our costs with the objective of still maintaining sort of the core competency to advance our objectives in the key smart metal verticals of automotive, nuclear, and military. Our objective is to achieve positive cash flow from operations this year, and we are going to do our best to try to achieve that. I know that we're not supposed to look forward in terms of results, but just a few tidbits in Q2. We are producing the first $1 million of a $2.7 million nuclear order. We're also will be shipping the first of our military kits to our Asian customer, the first 24 kits of 350 in that contract, and the bulk of the non-lethal bullet order that we received, plus odds and sods of Illusion. So we feel quite good about Q2. For the balance of the year, we are expecting a strong Illusion performance, and that's buttressed by a great order backlog, which I'll talk about a little later in the call. We are hoping to see the part, if not all, the second part of our nuclear order of 1.7 million going to France, and we're expecting the second release of kits from our Asian military. So I guess what I would like to say generally about sort of the complexion of the revenue is we've been working very extensively over the last number of years to try to change, as I said, the complexion of the revenue. Illusion has been our driver for years and years. The issue with Illusion has always been it's lumpy revenue because it's project based and it's one and done in many cases. But we've been trying to shift the revenue to more predictable sources, and particularly from our smart metal variant of the product. And I think we're starting to see that now. We didn't see much of it in Q1, but I think for the balance of the year, we're going to start to see strong revenue growth from smart metal. And the difference between smart metal and Illusion, again, is that smart metal typically comes under longer term contracts. So you're yielding much more predictable financial results. The analogy I like to use is that we've been operating with a one-legged stool for so many years. And as you can imagine, that's a wobbly stool because of the nature of revenues generated from architecture. But now we've got a three-legged stool because military is well established with our first long-term contract, and same with nuclear. So we have a three-legged stool. We're hoping to add a fourth leg to that in the not too distant future. From automotive to have a very solid revenue stream going forward. Finally, on financials, I wanted to talk about our balance sheet. We completed a $1.25 million debt financing in the quarter. And the purpose of that was to clear up some legacy payables from our 2024 year that built up and provide some working capital going forward. So I will give a little bit of an update on our key divisions, namely Illusion and then Smart Metal, the three business verticals in that. Illusion, it's interesting, we are seeing, and as evidenced by the revenue, improvement in Illusion. The last couple of years were affected by significant cost inflation in construction markets globally, and then, of course, rising interest rates, which make a lot of projects questionable. So what we're seeing is, of course, stabilization in construction markets, in the key markets that we're in, Europe, Middle East, Asia, and North America, not so much for us, but we're building there. And interest rates have started to fall. And so we are seeing quoting activity increase quite dramatically, which is generally a good sign for us. And we look at our pipeline, and it's in excess of $10 million for projects this year. So we are expecting Illusion to perform well after a hiatus of a couple of years. There are some very large outlying projects that we don't factor into our forecasts because they're distortive, but they are out there, and we're spec'd into them. But the challenge with these projects is always when they're going to land. We've also hired a new full-time resource to focus on the US. That's an area that we generally haven't put much emphasis into. Our best markets have always been Europe, the Middle East, and Asia. But as I said, we now have a dedicated resource, and we think there's a lot of low-hanging fruit in the US. Moving on to nuclear. I've talked a lot about nuclear the last little while. I'm sorry about that. Let me turn my ringer off. We've talked a lot about nuclear. We've moved into a new phase of nuclear with our first order with Nuvia. Nuvia has a certified threat resistance product in France. They're doing their first installation, which we're in the process of shipping right now. And we see a very robust future with Nuvia marketing this product, particularly in France, where there are upwards of 70 reactors. The low-hanging fruit for these threat-resistant panels is for life extension projects, and there are 6 or 7 of them. We're working on the first one right now. But they were here auditing our process yet again a couple of weeks ago, and they talked about prospects in France, and it seems that they're even larger than we had anticipated because, as we're told, every reactor now has to abide by these new regulations to deal with external threats. And they are in a pole position with this product to satisfy that need in France. So we are looking for upwards of 10 years of work, steadily growing work with Nuvia. They also plan to market in Italy, in Japan, various other markets. As you probably have read, nuclear has become very topical again, and we think we're well positioned to take advantage of what's happening generally in the nuclear market. Moving on to military, as I talked about, we've received our first 24-kit order of a 350 order. We expect that order to ultimately be 700 vehicles. That's for our customers' home military, and that's a replacement fleet. They are actively marketing currently in the Middle East, and we expect that portion of the contract to be substantially larger than their home country military. So that, I think, will lay a very strong foundation in our military business. We, of course, are marketing off the success there to other vehicle producers. And we're also continuing to work with our partners in multi-threat panels, which we believe either the end of this calendar year or early into next calendar year, we'll start to receive the first of the orders. And that is sort of the second prong of military, which we believe will be, again, a very strong long-term prospect for us. Moving on to automotive. Automotive, as you can imagine, is a very, very long sales cycle. We've been back into it in earnest now for about 4 years. Our principal activity right now is marketing the results of the prototype testing, first off, designing, testing, and cost evaluation of our first prototype part. And that's the underplate of passenger electric vehicle to protect against incursion and what have you. And for those of you who are not familiar, what the objective of this part is to first and foremost reduce weight, because these parts are generally made of high-strength steel, reinforced high-strength steel, which are very heavy, adding to the excessive weight of battery cells themselves. So we demonstrated almost a 50% weight reduction with our component. Because of the nature of the material, we absorb a lot of energy. This design particularly is effective at absorbing the energy of impact and reducing sort of deflection of that plate. And all of that purpose is not to damage the cells, which are very expensive. Finally, but most importantly, we've now demonstrated that this part, as compared to the incumbent part, is about 15% less expensive as well. In this more challenging EV market, that is particularly interesting to the OEMs. So we are having discussions with four OEMs on this particular component right now, and several tier ones, and we do expect to get traction on that. Probably the most interesting thing that we're working on is we have a partnership with an Asian tier one to develop a very innovative component, which I can't speak about yet, but it builds on our experience with that first component, protecting the underside, excuse me, of the battery. We have now shipped our first physical prototypes to our Asian partner. This is there are a lot of R&D went into this particular part, some revised casting techniques on our part, a new type of foam, a very high density, high flowing and strong foam. We are hoping that we can together present to an global Asian OEM this part in the not too distant future. And it, as I said, is probably the most significant development we've made, both from our own technology standpoint and a component standpoint in the automotive space. So I agree with everybody on the call. It's been a long and arduous time for us, period for us in automotive, but I do see the light at the end of the tunnel in automotive, and it is definitely a game changer for us. We are also working on a strategic opportunity that it's a little early to talk about, but it's taking up much of our time, that could also be sort of an interesting revenue addition to our existing business. And I'll be reporting on that as we make progress on that. So that's all I had to say today. I'm happy to take any questions, and I guess I pass the baton over to Neil or to Jan to generate those questions.
Thank you, Michael. So our first question is, in the press release, you have mentioned a focus on expanding your Illusion architectural product line. Could you share more on this expansion and how it aligns with your broader strategic goals, and what kind of market response you've seen so far?
Well, as I mentioned, we've done a couple of things. We brought on a dedicated resource to focus on the US. We really have just skimmed the surface in the US. I mean, we've done some marquee projects like the 9/11 museum, the sound studio in New York, and a couple of condominiums and that sort of thing. But given the size of the market, we've only just scratched the surface. So this new person we've hired, his responsibility is to develop a distributor and agent base focused on the US. We are looking at other areas in Illusion as well, possibly developing a more generic version of our product that's lower priced, that would compete directly with incumbent materials. That's a work in progress. Obviously, we still want to make money with that, so we're looking at ways that we can cut costs and have this product still a profitable product, but a much higher volume product for us. I think that's covers sort of the waterfront in what we're doing with Illusion.
Thank you, Michael. With regard to your recent efforts to deliver a prototype to the Asian global auto manufacturer, has there been a computer analysis or testing on the part?
Yeah, I mean, I can't talk a lot about it because we're bound by NDA on this, but it's a very interesting part, as I said in the body of my presentation, because it involves new casting technique for us, a different type of foam, and the application itself is a very unique application. So we have done a number of iterations of this prototype, and we feel that we have accomplished what our tier one partner has stated as objectives for the part, and that's being shipped. So that will now be tested by our partner. I won't get into the specifics of the testing, but it'll be tested. And if it is deemed satisfactory by then the objective is to present to a global Asian OEM.
Thank you,
Next
Michael.
question, please.
Could you elaborate on the recent efforts to improve operational efficiency? How do you see these initiatives impact CYMAT's profitability and long-term sustainability? Your senior management expenses are very high in relation to your revenue, and over the 2 years, we have not seen any changes, layoffs, or salary cuts as management has not executed. Can you tell us how management expects to get management and salaries in line with comparable sized companies?
Yes, so I've spoken to many shareholders about this. The challenge we face is that if we were only running our Illusion business, which we did for so many years, it doesn't require a lot of business development resource, R&D resource, senior management resource. So what we're trying to do is balance between maintaining the resources we need to further our automotive objectives and nuclear and military, but obviously being cognizant of the fact that is a drag on our cash flow. So we are looking at it, as I stated in the body of the presentation. We've cut costs by about 15%. We are looking to cut more costs, but not cut into the bone. Thank you.
Thank you, Michael. Given where the share price is, has the company initiated a normal course issuer bid, NCIB, or share buyback program, or is that in consideration?
No, that's not something that we have contemplated.
Thank you.
Sorry, go ahead.
With regard to the joint venture with Alucoil and the aluminum composite visor sandwich panels, do you have any update regarding this?
Yes, as I've mentioned in previous calls, it's a little bit out of our hands. There is a plant that's already constructed, that's been constructed for several years now, and our part of that partnership was to develop a brazing technology for these sandwich panels. We don't have the resources in-house, both technical and financial resources, to do that. So we have farmed that out to NRC. NRC doesn't cost us anything, which is what we like. The problem with NRC is that they work on their own timeline. They've finished the first phase of the project, demonstrating on a small scale coupon that they can braze. They're still working on scaling that up to what we would deem and our partner would deem sort of an appropriate size to demonstrate the efficacy of the brazing process. So unfortunately, I'd like to say that we're making lots of headway, but we are at the whims of NRC, who's working on this program.
Thank you, Michael. Earlier in this call, you mentioned a recent debt financing. Can you elaborate on the terms? Is it a convertible debt? And if so, at what price does it convert?
No, it is not. It's a short-term financing. It's a one-year note, and it's not a convertible piece. The objective is to take this financing out with a longer-term financing with a more traditional financial institution. We anticipate that with generating positive cash flow, that we will be a candidate for a more traditional longer-term term of financing, which is my objective in the not too distant future to do.
This leads me into my next question. You may have already answered parts of it, but are there any capital allocation strategies or plans to pursue new funding sources to support future growth?
Well, the best funding source, of course, is generating cash flow from operations, and that is a very high priority for us today. Second source of capital for us would be a more traditional longer-term financing to not only take out this note financing, but provide additional capital for us. So the combination of those two things, I think, will support us sufficiently for the initiatives that we have on the table right now.
Perfect. And the final question we have here is, what can investors expect in terms of upcoming product innovation, market entries? Are there any emerging technologies that CYMAT is particularly excited about?
Yeah, I sort of touched on it at the end of the presentation that I made. We are looking at something that could potentially be very interesting to us. I guess you would call it vertical integration, and it would give us not only a source of revenue but a cost improvement, better utilization of our fixed overheads, and what have you. That's the principal thing that we're looking at right now. We don't know how that's going to go, but if it goes our way, I think it could be a very exciting addition for CYMAT.
Thank you, Michael. It seems that these are all the questions that we have from attendees. If anyone has any further questions, please feel free to email us and we will ensure you get your response. Now, over to you, Neil.
All right. Well, thank you very much, Jan, and thank you, Michael, for the update. That was a pretty exciting update. Seems there's a lot going on. I think the biggest takeaway I get is just the fact that the real numbers. And, we've had, again, I know it's been a tough time, but fact is you had a great quarter, and I think you're on track to have obviously a banner year. And if a lot of these other potential opportunities come to fruition, it can only potentially just further the entire picture. So I think on that note, I want to thank again everybody for joining us today. But I think we're probably at I guess one of the strongest positions this company's been in, and unfortunately for the last several years. But it's great to see that, Michael, it looks certainly turned a big corner. It's great to see your cash flow positive. So I'm excited about that. We will also, just to let everybody know, try to do these quarterly conference calls now. Michael wants to, again, get out there a bit more. There's a lot of exciting things happening. So as much as you can read a press release or see the financials, obviously that doesn't get better than speaking to the horse's mouth. So we will look to continue to work on these on a quarterly basis. If something is that material, maybe we do it in between. But the idea is to maintain a regular reporting and regular webinar updates with Mr. Leek. And on that note, again, Michael, thank you very much today for your time and for the update on the company. As Jan said, if you have any other questions, call us, email us. Always here for you guys. And on that note, thank you and have a great day, everybody.
Thank you.